Welcome to the April 18th, 2019 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, every Wednesday night, we like to do a short video to replace the written commentary portion of the report. And hopefully, this video offers some insight as to how we look at charts, how we set up our charts, and is a bit of a change of a pace from our normal report. As usual, we're going to run through the broad-based market averages and open positions and tell you what we're looking for on the horizon in terms of new setups, if there are any. So let's get to the charts. First up is the NASDAQ 100. And at the top left here, you'll see the broad-based averages were all over the place in terms of percent gained and loss. We had the NASDAQ up 0.4%. Dow was flat. The Nasdaq Composite a minor loss, S&P minor loss, and then some heavier losses in the mid caps down 0.7, in the small caps down almost 1%. And the Nasdaq 100 continues to push higher, but we feel that it's a very narrow market in terms of leadership, with mostly big cap tech names surging higher right now, as we're having trouble finding small and mid cap stocks that are breaking out. So let's go to the NASDAQ Composite. And as we've seen over the past several days, on 411 it opens higher, doesn't really go anywhere. It doesn't close at the lows though. 412 opens higher, doesn't really go anywhere. 415 opens roughly the same area, sells off but recovers. Opens higher on 416 but can't extend much beyond the open. 417 opens higher and can't extend much beyond the open and then sells off. Although it did close just barely negative, it did finish about 0.6% off the highs of the session, maybe 0.7%, and on a pickup in volume. So it looks like there was some stalling action here on heavier than average volume, and certainly the heaviest volume day of the past few weeks. And on the weekly chart, we can see that the NASDAQ Composite continues to rally, though on lighter volume. And if we go back to QQQ, we see that for the past 1, 2, 3, well, you can't count this week yet, but the past 3 weeks, volume has fallen off while the NASDAQ 100 rallied. On to SPY, although it was only a 2% loss, volume picked up on the day, and the close was about 0.5% off. Same goes for the mid-cap 400, which after 1, 2, 3 attempts to push above the high of 412, it stalled and finally sold off. IWM almost down 1%, hasn't been able to go much of anywhere the past few weeks. It did reclaim the 200 AMA, but any attempt to push through the prior highs in February has failed. Didn't really even come close. It's stalling at 158 for 1, 2, 3, 4 sessions in a row. So I'm spending a little bit more time on the broad-based averages because overall I feel that although the Nasdaq's moving higher, especially the NASDAQ 100, under the hood, we're starting to see some issues with the market in terms of leadership, and that big cap NASDAQ's leading the market higher, and that's a very narrow list of stocks. And we're just not seeing the movement that we saw earlier in Q1. So in the short term, yes, these indices could continue to climb a bit higher, but we're a bit concerned that these averages are vulnerable to some selling. All right, on to open positions. Per our intraday email and text alerts, we sold Cyber at 120 for a 50% gain. We didn't like today's selling on heavy volume, and we're happy with a 50% gain on the final 1/3 position. On top of that, with broad market conditions being a little iffy for small and mid cap stocks, we felt it was best just to take our profits here. Let me see what else stopped us out. We also sold PanW as it broke the 20-day EMA on a higher volume. If you're still long PanW, you can exit on the tomorrow morning. The stop was down below the prior swing low, so our exit down here cuts the loss in half, limiting it to about $100 on a 50K account, so very small. And the Avalar stop triggered, and we're out with a small gain. We also sold partial size in Wix around 120 per the intraday email alert. We have a stop on the remaining half position beneath Wednesday's low, and we're just going with a tight stop in wicks because we didn't like the lack of follow through, and there wasn't much buying. It was average volume on 412. Yes, it was a pickup in volume, but not much follow through beyond the 123.20 pivot area. So we're going with the tight stop to limit our losses. And our first sell was maybe a $50 loss from our ad around 123.70. And if we stop out beneath Wednesday's low, that is just below break even from our first entry, which was around 121. And mid K, we're still long. Our stop just missed by a penny here. But if it breaks below 169, we'll be stopped out. Again, we felt that it was best to limit losses in stocks that have really failed to impress. We have stops in place now for the remaining half position of Wix and the position in mid-K, which is also a tight stop. If triggered, will stop us out with a small gain. When we talk about performance under the hood, we're talking specifically about our watch lists. You know, everyone can see what's going on in terms of broad market price action by looking at the S&P, the SPY or QQQ, but under the hood, we're looking at Tandem falling apart on volume. We're looking at medical falling apart. Just about every stock in medical on our watch list was down 4 to 10%. SGen hit 7%. PODD was one on our watch list. Internal watch list, not anything that we've listed officially, but meltdown there. VRTX is a big cap pharma, and it got lit below the 200-day moving average. GCOS, this was a stock we were monitoring near the 20-day EMA for a potential entry on a break of the downtrend line, which never materialized, and the stock just rolled over the past 2 days and sliced through the 50 MA on a pickup in volume. And the breakdown in GCOS is a good example of a stock that goes from being buyable here on the break of this downtrend line, and then in a week, the setup's blown up in the short term. So what we're looking for now is just, once you're down more than 15% off the highs, this is almost 18, we're looking for another base to develop. So just like in this area here, once the stock breaks down below the 50 or the 10-week moving average here on the weekly chart on volume and is more than 15% off the highs, we're looking for another base to form. So if it's already 1, 2, 3, 4 weeks into a base, if it's a 20% pullback, it may need another 3 to 4 weeks sideways. So at the very least, we know that GCOS is going to need maybe 3 to 4, maybe even 5 or 6 weeks more sideways before it can completely fill out its base. It may need even more time. We can't predict that, but as of right now, we know that it's going to probably take at least a few more weeks before it's ready again. And EHTH, which was on our watch list as a buy limit order, which just missed by a few pennies several days ago, it broke out on decent volume, went sideways for a few days, and then with no warning at all, there was no heavy volume selling off the highs here. I mean, this was a bearish engulfing day where the open was greater than the prior day's close and the close was less than the prior day's open, so it's a bearish engulfing pattern. Volume wasn't heavy though, and it just fell apart on the open today. Sold off maybe 15% in the first 30 minutes and then sold off 25% intraday before bouncing. That's just ugly price action and scary. GWPH was another stock we were monitoring for a potential downtrend line break and an entry above 174. It just failed the 50-day EMA on a pickup in volume. MDB looks like it's lost the 20-day EMA again. However, it could turn around and get back above. FSCT first pullback to the 50 MA, so far not holding. May need a deeper correction. Coop stalled again at 100. This was the second time it failed here. Since the first failure, so that's 3 stalls at 100, and it sliced through the 50 MA on a pickup in volume. DocU sliced through the 50 MA on a little bit higher than average volume. And we're canceling our setup in W day from Wednesday's report. Although it really hasn't done anything wrong, we just don't feel like now's the time to buy breakouts, as many of the recent breakouts may have worked for a day or two and have fallen apart. We know that PCTY held up on Wednesday, but this is two sessions in a row now where it's had a chance to bust through this prior high and the downtrend line, and it's failed to do so, stalling at 93 twice, basically rejected off that high with the close in the bottom half of the day's range. Well, here, the first day was in the bottom, maybe third, and today we have a finish below the midpoint, which is slightly disappointing. But it's not horrible in that it's still holding up above 90. But we don't have much confidence right now that this stock will be able to follow through to the upside. We are seeing some follow through, obviously, in the Nasdaq 100, well, larger cap stocks, but many of these stocks are no longer the type of stocks we look for and are not what we would classify as our typical leading stock. Apple's moving higher, Netflix is stalling, Facebook is moving a bit higher here. Well, it's wedging higher. Amazon moving higher, not with a ton of conviction. So, and you can see volume's gone down as the price has gone up. So, the weekly chart is a pretty good sign of that. We have Amazon climbing higher on lower volume. So as you can see here, big cap Nasdaq, some of the bigger names in the Nasdaq 100, they're working. They continue to push higher, but under the hood, we're just not seeing our type of stocks move the way we want them to move. And so we feel right now it's best to either be 100% in cash or have a few setups on that are working. You don't want to get too aggressive here. Maybe limit it to one buy if you have to, if you see something that's really good. But other than that, I think the best thing to do right now is to just sit on hands, don't do much of anything, and just wait and see what happens. This is a holiday shortened week of trading. Markets will be closed on Friday. So this is the last report for the week. Again, there will be no report on Thursday night as the markets are closed Friday. We'll be back again on Sunday with our normal report. Have a happy and safe holiday weekend. And we'll be back on Sunday night, and we'll be back next Wednesday for this video. Thanks for joining us. Have a good one.